of volatility. That's a good point to bring in Abigail Doolittle, as we do every day at this time for our Options Insight segment. And Abigail, taking a look at the VIX here on the day, still camped out below 17, but I'm told there's a new VIX on the block.
Indeed. Exciting times and great segue, of course, Romaine. It's amazing because everybody's talking about the idea that the VIX, whether or not asking, I guess the question whether or not it's broken. And we do have a new VIX product in town. But first, let's focus on this VIX. Scott Bauer, Prosper Trading Academy, CEO over there. You know, there's this continual talk that there's so much complacency. The VIX is broken, not registering the volatility that could be out there. And yet, in late February, you told us in March we could see the VIX go up to 31, and it went exactly to 31. And I believe that you were using historical standards there. So is the VIX broken or not?
Thanks, Abigail. And no, it is not broken. But, you know, what is happening is because of the zero DTE options, which have become so popular and the volume increasing in these, you know, 1 data expiration and 0 data expiration options, what's happening is the volatility in the market is getting a little bit more condensed. So the VIX measures volatility going out 30 days. The new zero DTE options, they expire, you know, in literally a matter of hours. So we're seeing, you know, 45% of total volume now in the SPX in these zero in you know, 1 data expiration options. So the VIX is not broken. It is still a great measurement for looking out 30 days, you know, forward. But we've got to look at some of these other measurements now because of the rise of the popularity of these options that are trading.
Okay, so let's talk about this new 1-day VIX. And I should mention there's so many different VIX products out there. There's the VVIX, there's the 3-month VIX, there's the SKU index. So the fact that we have this new VIX index, yes, it's very exciting, but it has a lot of company. What does it measure exactly? Because the 1-day VIX today is down. The S&P 500 is up slightly, so I guess that matches. But we already know that. We're within the day. So how do traders use this tool?
Sure. So the regular VIX takes option expiration 23 to 37 days forward and aggregates S&P option prices. The 1-day uses 0 and 1-day options. So on a day like today where you're seeing the 1-day volatility index down at, you know, just under 10, what that's telling you is today specific, there's not much going on in the marketplace. There is a ton of complacency. I expect that to change tomorrow because we get Microsoft earnings, we get Alphabet earnings. There's more of an impetus for some volatility tomorrow. So I would expect a rise in that. But again, this is measuring 1 day. Yeah. And the way that and you know, retail traders are using this is they look to this when there's a big economic report or a big earnings report and they're looking for a quick move in the market.
Right. Well, it's interesting because I feel as though there's so many people who want volatility. They don't want to see this complacency anymore. We have this 1-day VIX now and it's still showing. It's backing up the VIX in terms of complacency. In fact, the VIX is actually green very quickly. ODTE option, are they here to stay or to go?
No, they're here to stay, and I wouldn't doubt if sometime in the near future we start to see them on some of the very highly traded equities like an Apple, a Microsoft. I bet that's not too far out in the future. They're here to stay.
Thanks to Scott Bauer, Prosper Trading Academy, for joining Options Insight today. And stay with Bloomberg Markets. We will have a conversation with Cboe CEO Ed Tilly tomorrow at 2:15 New York time. This is Bloomberg.